Hi, everyone, and welcome back to the Mind Movement Health Podcast. Today, I have a very special guest on the show, Nancy Griffin. Welcome to the podcast.
Thank you so much. Kate, I love what you're doing.
Well, thank you. And today, I wanted to have you on the show. Our podcast, is mainly about women's health and wellness. And part of that is not just sort of our emotional and sort of physical sort of side of our health, but also that wealth aspect as well. So, today, where would you like to begin when we talk about wealth and health?
Well, I was a wealth advisor, and a lot of my clients were women. And one of the things that I very quickly realized as I started to work with them is that they have a disproportionate amount of responsibility in their families for their family's health and wellness. And it's like every family needs to have a nurse practitioner on staff. Well, how much do women know about this, that, and whatever else? So that's when I built my practice, especially focusing on women. We started with health and then we talked about wealth.
Mm. And when it comes to, I think there's a lot of questions around this area because I know, being a female myself, we didn't really talk about wealth in our household. Like we talked about trying to, my parents were big savers and sort of telling us to, not waste our money on things, but it was more on that mindset of it, not about actually how to build wealth.
Well, again, going back to the family scenario, men are the ones who are supposed to focus on the whole investment aspect and the wealth component. And women, of course, are supposed to make sure that everybody is healthy. And if they're not, then what do we need to do to help them be healthy?
Yeah.
So, this is when I started to build it out. And a really, really, really good wealth advisor will anticipate health-related challenges because none of us knows when we may be stricken with some critical illness and or premature death of a partner, any of those sorts of things. So a good wealth plan includes not just the investment and savings component, but it also includes making sure that you're well looked after pertaining to your health.
Mm. And where, if someone's listening in, where do they start if they think, oh, yes, this makes sense, and, I should start to have some plan around this? Where should they start with their plan?
Well, just about everybody has a bank account. And if it's all online, then you can still meet people online to have a conversation with. And every bank has advisors who will reach out to you and help you start with that wealth plan. Now, longer term, you may grow out of that individual as your trusted advisor. And so then you ramp up to somebody who is more sophisticated. And again, paying attention to realizing that often you do grow out of your trusted advisor and getting a new one to help you with where you're at that point in time.
Mm. And if somebody is sort of listening in and thinking, I don't have a lot of money and I don't have a lot of spare money and I'm only kind of getting from week to week as it is there a certain amount of money that we need to start with to start this plan?
Well, we know that you need to make time as your friend because the longer you wait to get started, the more challenging it becomes because you want to get some money into an investment portfolio so that you can take advantage of time over time. And it really, that's why working with a trusted advisor is extremely important. None of us likes to do our own dental work. There are professions that focus exclusively on helping you put it all together. I was on one podcast the other day, and the question was, what if you have a disproportionate amount of debt? How do you deal with paying down your debt as well as saving for the future? Well, again, what you want to do is take advantage of time and sometimes, depending on which country you're in and what taxation scenario exists, sometimes one of the most effective ways is to set aside money into a retirement account. And most countries allow you to deduct whatever you've put into that retirement account. And then you'll get a tax refund. So take that tax refund and put it against your debt. But at all times, you want to pay attention to taking advantage of time, 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 time.
And should we focus on paying down that debt first before we look to invest money elsewhere? Or is it okay to kind of be slowly paying off that debt, but then trying to siphon some money aside to invest?
Exactly. Do both. Absolutely do both. Absolutely do both.
Mm. And people talk about financial security, but what does financial security mean?
Well, it means that you never want to get caught short. And that's why working with somebody who will take you through the what ifs. What about this? What about that? What about your children's education? What about your retirement? When are you planning on retirement? What about you leaving your corporate role and wanting to start your own business? So that's why working with a trusted advisor who will take you through the what ifs and you answer the questions, but the person is proposing different scenarios to you. And then the next step is for that person to craft a wealth plan for you that you will then go forward with, making sure that you review it at least annually, if not more frequently, if anything should change.
Mm. And when it comes to sort of saving, we often hear that, people can spend, let's say $20 a week on buying a coffee every day. And if we didn't buy that coffee every day over a year, it amounts to $1,500. Is this the sort of thing people should start focusing on those sort of small things to save money? Or is it more be looking at that sort of overall picture of where your expenses might be going and maybe how to generate more money coming in rather than sort of holding on to the money that you have already.
Yes. Well, that's a favorite example. And maybe every day is too much. Maybe every other day is realistic. And if every other day, then what amount of money do I now have to either invest or pay down debt or do both? So again, it's a what if, what if you only had that coffee every other day? But each one of us has got to live our lives every single day, and we've got to live our lives with a smile on our face. And if that particular item puts a smile on your face, then it's an investment in you, and you are the number one asset. So these are all the different considerations that you need to be taking a look at, but also taking a look at with someone else, with that professional.
Mm. And when it comes to generational wealth, I know being a mum myself, we always want to think about our kids and how can we set up our kids so that they don't have to struggle as they get older, and into the workforce. Where do we start when we want to think about generational wealth?
Insurance. Insurance is so, so, so incredibly powerful. And normally, when you work with a wealth advisor, as soon as they introduce the whole topic of insurance, people kind of coil back and go, "Oh my goodness, I knew that they were going to sell me some insurance." Well, insurance is incredibly powerful. That doesn't mean you take all your money and put it into an insurance policy. But the sooner a young person puts insurance into their portfolio at a much reduced cost, because the younger you are, the least expensive it is, that it's also at a time when you're healthy. And I've often said, if you want to find out how healthy you are, apply for life insurance because no life insurance company is going to give you a life insurance policy at their best rates if you're not really, really, really healthy. So insurance fits in with young people getting started, but it also fits in with parents and grandparents. Often grandparents let their insurance go because insurance was purchased to replace income in case something happens. Well, if you're a grandparent, you've had a great life, you've got lots of other good things happening in your life. Who needs that insurance anymore? Well, guess what? That insurance is extremely powerful as a philanthropic statement. If you donate some or all of that insurance to a not-for-profit, a hospital or United Way or whomever you care about, there will be a huge tax deduction. So often when people die and they, reconcile all of their holdings, they find that there's a whole lot more tax to be paid than they ever thought was possible. So insurance longer term is a great way to do tax planning, but also exceptional tax planning through a philanthropic donation.
Hmm. Interesting. I didn't know any
So,
of that.
okay, so that's why you need to have a conversation with a trusted advisor about insurance. And often women don't ask questions because in asking questions, they sort of are presenting their vulnerability in that they may not have considered all of this before. So it's almost like, well, this is too basic. I can't ask these questions. Well, guess what? Start asking. Start asking. And if you don't like the answers, then go and ask somebody else because a total wealth plan that is very sophisticated will have insurance in there for many, many different purposes, not just when you die.
Mm. And when we're looking for an advisor to help us with, what should we be looking at? Because I know from following different advisors myself, there are some people that sort of say that if you work with an advisor, sometimes they take a percentage of what your portfolio is worth, and this can end up costing you, a lot of money compared to the way other fees are structured. So, what should people be looking for?
Well, first of all, you've got to educate yourself for all of those things. And those are absolutely fair questions to ask. Anytime you meet with somebody that you're potentially thinking of doing business with, tell me what your fee structure is. Tell me how much you get paid from what I would invest with you. Also ask that person, are there other ways that I can still invest with you, but at a reduced cost? So you need to shop very, very, very carefully. The same way you would for your back to school kids' shoes. You have to be a discerning shopper and you have to ask all kinds of questions. So educating yourself is crucial. And lots of different investment groups or banks will have different seminars that they offer, either online or in person. Participate in those. And when you go into one of those events in person where other people are present, often you'll learn from other people's stupid questions. So you don't have to, it's true. And going with a group of women, they love to do this sort of thing and ask away, ask all sorts of questions because that person wants you to become a client, but at the same time, they want to serve you well. So what you're trying to do is find that sweet spot that is the best for you and the best for them.
Mm. Well, I know, do you know what I mean? When you said stupid questions, sometimes it's just questions you've never even thought of as well that someone can bring up.
Exactly. Right. Exactly. Like insurance. If you haven't thought about that, it is a whole new world.
Mm. Well, I guess for me, myself, thinking about insurance, I'm like, we've got so many insurances and, we've got house insurance and car insurance, and you get travel insurance and, public liability insurance and all the rest of it that you just kind of get a bit overwhelmed with insurances.
Yes, you do. Yes, you do. But at the same time, Kate, imagine what happens. Imagine what tragedy can occur and there is no insurance and what those implications are. So that's when you decide, okay, how much of this can I tolerate? And if you can't tolerate that, then maybe I need more. If I've got too much, then let's lower this threshold.
Mm.
So again, but often if you lower it, you can't increase it later because you're that much older. So those are all the kinds of considerations you need to include in that conversation with that professional advisor.
And if you have a partner who maybe, say you suggest to your partner, yep, we need to start thinking about, our financial future and maybe changing some things, and they just don't seem very interested or it's very hard to get them on board, what advice do you have for people that may be in that situation?
Well, the old horse to water routine is spot on. You can take a horse to the side of the water, but you can't force it to drink. The most important thing is that you pay attention to your own scenario and how vulnerable are you? How intertwined are you with your partner's scenario that would leave you vulnerable if that person hasn't chosen to do something? And so those are the considerations that you need to work your way through. And, just lots of dialogue. Why are you not stepping up to this? Is it the person that we're working with? Or what concerns do you have? We all know that a lot of people don't make a will because they think as soon as they do a will, they're going to die immediately. So, and a lot of people just don't want to talk about this.
Mm.
So having the conversation or trying to have the conversation to get to the root of what this is getting in the way is really, really, really important. Really important.
And I guess too, it's making sure that you do it at a time where you both have time to be able to do it. You're not sort of having to
Correct.
rush off to something else. It's
Right.
not in the middle of having a fight or something like that that
No,
you bring
no,
it up.
no, 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 because when you first came together, you came together with a ton of dialogue. That's how you decided that you wanted to be together because you shared so much back and forth. And so that's why this is a scenario that needs to continue. But often it's also a way to advance that scenario by having a third party asking some questions and taking you through it and being really, really honest. Obviously, you're going to be respectful, but at the same time, be really honest. Like, I've got real concerns about blah, 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 and help us out. What would you recommend?
Yeah. And when it comes to our next generation and our kids, what can we be starting to teach them from a young age, which is going to help them?
Well, they need to learn, obviously, they're going to be working, they're going to be earning money. And the message as a parent is you're going to be setting a certain amount of that money aside for the future. And in setting it aside, when do you think you might need that money? And if that money isn't needed because they'll continue to earn and they continue to set money aside, then should we take a look at investing? And if you're investing, how long are you investing for? You know, if the child, say, is 16 and they're thinking about doing a master's program and they don't think they'll need that money until 6 years from now or 7 or 8 years from now, then you've got some time. You don't have a lot of time, but if that is the time horizon, then what sorts of investments can that person get into? And again, the sooner you get that person working with a professional, the better.
Yeah.
The better, the better, because they're learning as they go. And it doesn't matter, how little they have, because the whole goal is over time, it will be significantly more.
Mm. And if we, as women, we tend to, as you said, want to look after our families, but we also want to make an impact. And sometimes, depending on what area that may be in, we need money to be able to make that impact. Money's not,
Right.
essential, but it does make things easier, to do things. You can have a nice life without any, little money, but in the grand scheme of things, it does make some things easier. So when it comes to being able to create an impact, how much do you believe money is vital for that?
Well, with my Women Worth and Wellness, it is focusing on health and wealth, but then net worth and self-worth and philanthropy and legacy planning. So the net worth and the self-worth comes from giving back and sharing. Because again, from a taxation standpoint, more often than not, countries will encourage you to donate so that they haven't got responsibility for all humanity in their country. So they will encourage you to donate. And when you do, that's a charitable donation, which reduces the amount of tax that you owe. But also at the same time you're giving or sharing, it enhances your own net worth or your self-worth rather, because you're in a position to give and to share and extend yourself. You're not in a position where you're asking somebody else to support you. So it really makes you feel a whole lot better. And I did a lot of different events with not-for-profit health-related organizations focusing on women's health. And I started with charitable giving. Well, now 30 plus years later, philanthropy is a huge consideration because we know that women are inheriting more wealth from their parents and and earning more too. And going forward, they will probably continue to inherit more. So all of a sudden, women have this incredible amount of wealth that they are stewarding. So the sooner a young person learns about how to deal with this whole financial scenario, the better.
And when it comes to donations and charities, How, as a somebody that may be looking at donating to a charity, how do you know that the money you're donating is going in the right places and not being, eaten up somewhere else, as so often we hear?
Excellent question. Excellent question. And more often than not, a professional advisor can help you with that. But normally, the first stop you go to is the local hospital because they're always raising money for this, that, and whatever else. But beyond that, you have to be discerning. You have to be very discerning. So you just don't direct your dollars to the XYZ charity. You find out exactly where those dollars will go and on a scale of 1 to 10, how effective are they at managing the wealth that has come to them to steward? And some are much more effective than others. So again, every person needs to be extremely discerning. And being discerning means that you educate yourself and you ask a lot of questions so that you've got that level of confidence rather than, oh, that sounds like a great idea. And you direct some money and then you find out, that somebody was embezzling money or, whatever. You never want that ever. You don't want to be surprised.
Exactly. Is there any, when it comes to those charities, do you know if there's any kind of, public information that they have to share with people that are looking to donate?
Yes, if you're not for profit, you have to share all of that information. And some will be shared on a limited basis because they don't want to flood the market with a whole bunch of information. But there's more behind that. So if you see the initial info and it's not enough, then keep digging, keep going back, keep asking.
Yeah. And for, a listener, a woman that's listening in right now, what would you like to share with her? What would you really like for her to know?
Just own your self as your number one asset. And if you are your number one asset, then what do you need to do in order to protect it and to maximize its ability for a positive impact? And that just means that you've got to work with a whole pile of people and ask a whole pile of questions until you've got a whole level of confidence that what you've got in place is fabulous. I just, as soon as we understand what we own and why we have what we have and how it's enhancing our lives, not just today, but going forward, all of a sudden you can put your shoulders back and it's like, yes. I mean, that's the logo for my Women Worth and Wellness. It's like, I got this. I understand. And I feel very, very confident and very happy that I'm well protected in case something happens, but I'm also very well protected in saving for my future. I had an example recently where I had a friend visiting me, and she's 78, and she goes away in the wintertime for most of the winter. And of course, we know that markets go way up and markets come way down, and we know the world at this point in time is extremely volatile. But at the same time, I'm not driving the bus for my own financial future. I've given that over to somebody else, but I need to have a level of confidence that I don't need to worry if the markets go way down. Anyway, she was staying with us and she said, Nancy, I've got a Zoom booked with my wealth advisor, and I'd really like you to sit in. He won't know you're there, but I really want you to hear the interaction and I want you to give me your thoughts. Well, I know this guy and I know he's a super guy and I know her. And I said, I'm more than happy. Anyway, away we go. The conversation begins, and he says to her, kind of what she really wants to hear. At any point in time, I've always got 3 years of money set aside to cover your monthly requirements. So every year I add on another year. So every year I have to set aside those dollars to cover your monthly. So you don't need to worry. You don't need to worry. But in the meantime, we've got some profits. I mean, the markets have been good recently. We have some profits that I want to take on certain of these investments. And and then he tells her what they are. And he said, these are the investments I'd like to move some money into. So it wasn't just trust me. It was, I want to do this and I plan on doing this. And she said, oh, well, that sounds great. And then she wanted to take a big lump sum right now. And is that possible? And he said, definitely that's possible. And his whole attitude is, your wealth is there to support your life and enjoy your life. Like like make sure you're using these assets to support you, the number one asset. So away they go back and forth, a couple of more small details, nothing major. Anyway, before it's over, I said, "Hi, it's Nancy. I've been listening on a scale of 1 to 10, you're 491." Because really, he had taken his time and he had definitely reassured her that everything was just fine and that no problem, we can take a lump sum now and you're still going to be good. And I'll talk to you again in 6 months. Well, she's like, this is amazing. And then she's got big thank yous for me. Well, all my thank you was just a reinforcement that she, has additional confidence that all will be well.
Mm. And on the sort of question of age, if there's, our listeners can be anyone from, in their maybe 30s right through to their 60s or 70s. Is there an age where it's too late? Or, is it just like wherever you're at, start now?
I had a client who started some serious investing in her 70s. She had little beady blue eyes. She was just the cutest thing. And she wanted to borrow to invest. And I said, okay, well, now just hold your horses. Let's just back up on this one. Now, why do you think? Well, she said, Nancy, I'm concerned that I may not have enough. And I think this is great. I've got a big portfolio. I'm paying too much tax. And I understand the cost of borrowing is a deduction. So we started small and she did increase her wealth as a result of that. But that is most unusual, most unusual. By the time you're in your 50s, you should have that framework in place and you should understand what you have and you should feel very confident that what you have is what you need to have, assuming you're going to live to be 100. And if you've got a partner, maybe the partner's gone before you are, what about your kids? What about taxation? What about all those things? But by the time you're 50, that framework and your knowledge of that framework should be in place. The only way this will change is if you have a big inheritance. And maybe you've anticipated this, so this is something that you want to include in those discussions. I'm expecting a big inheritance from my parents. They're both alive and very well right now, but I think longer term, this is something. And how would I deal with that when it happens? Well, of course, the advisor will say, well, if there aren't any immediate problems, let's just wait until this is something that we have to deal with. But my message is by the time you're 50, you should have a really, really good idea of what your whole wealth scenario is. The same way with your health. By the time you're 50, you've come through a tremendous amount. What do I have to do now to stay healthy to 100?
Mm. And I think health is one of those areas that sometimes people don't invest as much in because they just assume it's something they'll always have. It's not something that's going
Correct.
to disappear. But as you
Right.
said, as we get older, that's something that we do really need to consider.
Right. And you often hear people say, well, in case something might happen, well, guess what? Something will happen. We don't know what it is, and we don't know when it will happen. But are you prepared? Are you prepared? If this should happen, how would I deal with that?
Mm.
So again, those are not questions you can really ask yourself. A fabulous wealth advisor will ask you those questions. Have you thought about this? And what about this? And do you have any concerns? Are you pretty confident? Or this is something that I think you should think about. And the next time we meet 6 months from now, that may be something that we want to take another look at and see how we can bring a level of satisfaction and confidence to you that that has been addressed and you're comfortable with what is there. Either you have added something or you have done nothing. But to have the conversation to the point where you understand and have that level of confidence is extremely important.
Mm. And if someone is sort of, just sort of started newly investing as such, and as you said, sometimes the markets can be quite volatile. You also mentioned that sometimes the meetings are 6 months apart, which some people may think that's a really long sort of time apart. If things are changing, is there stuff I should be doing, or should I just be sitting back even though the markets are kind of going up and down?
Well, again, that's a conversation that that person should have had with you because if you've basically got things in order, he or she would have said, now the markets look fine for now. But who knows? Like tomorrow, the bottom could drop out of everything. And how well prepared are we? Like my friend, he's got 3 years set aside for her. And excuse me, he's got it set aside in a vehicle that doesn't have risk, that's not at the risk of the market. So more frequently, like what you never want is a client who panics. Like if you've addressed all of these things in advance, then there's no need for panicking. But at the same time, that person should always be accessible to you. Like, I'm really concerned. Are you sure this is going to work? Are you sure this is going to be okay with what we? Then that's fine. Then that's up to that wealth advisor to reassure that person that no, no, this is fine. We've got everything in order. And, as I've often said, when you go to a new doctor, the first order of business is they do blood work because they want to understand who you are. Same thing with a wealth advisor. Their whole practice is based on them knowing their client. And if they haven't known their client and put that client in investments or not invested, then their whole profession and their designations are at risk. So a really, really good wealth advisor will take that time to know his or her client so that all of those bits and pieces have been in place and you've got a huge opportunity to ask any questions that you might have.
Mm. So when it comes to, having a financial advisor, you need to have trust in them that, you've communicated everything that you need, but then you also should be proactive yourself and ask questions. And if you have any concerns, make sure you voice them too.
Proactive is the first priority to select that person to begin with. And often where you find the best advisors is a referral from a family member or a friend or whomever who has already dealt with this person for some period of time and, have given that person their trust and it hasn't been compromised. They've served them very, very well.
Mm. And I just want to touch on, at the minute, I know from talking to a lot of my clients and things, they're scared now with the amount of scamming that tends to happen, and whether or not that's online or, people, it's through investing or it's just through banking or whatever. People are very afraid of being scammed. So, is there, credentials people should be looking for when they're looking for an advisor, or any sort of checks that they should be doing just to make sure that it is a legitimate, person in business?
Well, normally you want to work with a top-notch firm. You don't want to work with somebody who's just put a shingle out, who's got all the credentials, but are there by themselves. That in itself should be a red flag. But really, really, really satisfying yourself that they do have a AAA1 fiduciary responsibility to your well-being, that they will serve you exceptionally well. And again, it's no different than your doctor or your medical professional. You're putting your trust in their expertise and their professionalism and all of their credentials to serve you exceptionally well. So again, shopping very, very carefully, but there can always be a bad apple in a big firm. So again, that's when you need to be discerning and satisfy yourself from several different directions. I mean, you can't really grill them to the point where you've got them down on the floor with your knees on their chest. You have to be respectful, but there are ways that you can be respectful to make sure that you're making the right decision. And that's why I encourage people to go, any wealth advisor is probably offering seminars and go to them, go with some friends, as I mentioned earlier, and ask questions, and you'll see how that person presents themselves. And that then can give you a level of confidence. No, I think this is going to be okay. But again, it's your money. It really is your money, and it is your future. So you have to be really, really, really discerning.
Mm. And is there anything, today that maybe we haven't highlighted that you'd like to highlight to our listeners?
I think just reinforcing that you're the asset. You're the asset, and you can't expect others to do the heavy lifting for you. And often we hope that they will, but then sometimes we don't like people telling us what to do. So that's why it's a bittersweet scenario. It's something where you've got to pay attention, ask the questions, and develop a level of confidence, but never take your eye off the ball. Like just because you've arrived now with a sweet spot and everything's in order and that's great, don't take your eye off the ball. Keep working with that person to make sure that things continue to be really, really good. Actually, one other point that I've made in several scenarios is a lot of women work with a corporation to begin with, and then they have aspirations of being an entrepreneur. And so you start out after university and you stay there for 20 years or so, and then you want to launch. Pay attention to the whole benefit scenario because if it's a great corporation, you'll have benefits from that corporation. Once you're gone, those benefits are no longer in place. Sometimes they give you 30 days to convert some of them, but now you're shopping on your own for benefits. And that can be a really big challenge because you're that much older. And so we often encourage, depending on the scenario, we often encourage people to look at having a benefits package that's personal that they've selected first and then use those corporate benefits as an enhancement to your personal. So that 20 years later, when you're an entrepreneur and you no longer have those corporate benefits, you've now got substantial personal benefits in place that you can then, if you can transition some of your corporate ones, go for it. If you can't, at least you've got this framework in place already.
Mhm. Well, I think that's
And
great
again,
advice because I was
yeah,
say I meet so many women, as you said, that have been in the corporate world or whatever for a certain amount of time, and then they hit maybe 40 or 50 and they
right.
might be burnout and they've just had enough and they want to change and they want to get out.
Right, right, exactly. I'm out of here. Goodbye. All the best. No, for sure. It happens very frequently. Very seldom do we see women starting at 20 or 21 and staying till 60. It just doesn't happen because those women, unless you've gone straight to the top and you just feel like, no, there's like, why would I go? You really want to if you've only got one life. So often women do have lots and lots of leadership potential and they want to turn that into driving the bus for themselves.
Mm. And finding something that feels fulfilling for them too.
Exactly. Precisely. 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 I don't have to be bothered with all this stuff anymore. I know exactly.
Amazing. Now, I always like to finish off our episodes by asking my guests if there's one piece of advice that you could give to our listeners that they could go off and instigate right after listening to this podcast. What would it be?
Well, again, I'll repeat it, and that is just remind yourself that you're the number one asset. I really encourage people to spend a lot of time talking to themselves. Don't tell the insurance company because they might think you're losing your mind. But, it's constantly, where am I at? Am I confident with all of this? Am I not? If I'm not, how do I like the person I'm working with? Am I confident? Am I not? Those are questions you need to ask yourself. And if you're okay, fabulous. If you're not okay, deal with it because life goes on and you're smart and capable with lots of potential. So don't be surprised by something that you didn't spend enough time on.
Amazing. Great advice. Now, where can our listeners reach out and connect with you?
Well, the best thing is they can send me an email because then they'll go into our database. And this fall, we're ramping up with some new offerings, and those won't be on social media immediately. We're on social media all the time. But my email is nancy@womenworthwellness.com. Nancy@womenworthwellness.com. So just send a quick email and just say, put me in your database, or this is a question that I have for you based on what I heard, and get them to whatever your question is, I'll answer it. And I'm 24/7. If I don't get it the night before, then I'll get it the next morning. And I'll always respond. I'll always respond.
Amazing. Well, I'll link that up in the show notes too. So, listeners, head across there. You can grab Nancy's email and we'll link up all the socials and everything too so people can reach out. But thank you so
Perfect.
much for coming on the podcast today, Nancy. I think this is a really important topic, and especially for women, kind of as we said, it's something that we often don't put at the forefront of our thoughts. It's kind of down, or we leave it to our partners to organize it. And I think, as stats show, the more women that have more money, we actually do a lot better in the world with it. So thanks for coming on
Exactly.
this
And
podcast.
yep, the smartest women are the ones that will make this a priority and make sure that everything is in the best order it possibly can be. So no surprises. And thank you, Kate. It is my pleasure.
Amazing. Thanks again.
You're welcome.